Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at capital surplus as we do in each one of these fundamental analysis tutorial videos. I'll give you the actual definition and then we'll go on to look at some examples. Capital surplus on the balance sheet is equity which cannot otherwise be classified as capital stock or retained earnings. Capital surplus is usually created from a stock issued at a premium over par value. For this example, we'll be looking at the Walmart Stores Incorporated balance sheet. You can see that we're looking at the balance sheet annual data here. Scroll on down to the third section on the balance sheet under the stockholders' equity, and you will find what it is that we're looking for. Let's break out the old tools right quick. Here you have stockholders' equity, and that is broken into multiple different subcategories. You can see the capital surplus down here. And as we've talked before in other videos regarding preferred stock and preferred stock, common stock, so forth and so on, all of these items here, whenever you see them listed here, this is simply the par value multiplied by the total number of shares that they issued originally when the company issued them, and that is how you got that 342 million number right there. Now, par value is just an arbitrary number that the company lays on its stock. It says, I'm going to say that my stock has a par value of $10, and it could be $1, it could be 20, it could be any number that's an arbitrary number. And then the company turns around and they sell that. Now, based on the accounting rules, they cannot sell them for less than the par value initially. So in most cases, they're actually going to sell them for more than par value. So let's say that Walmart had a par value of $30 on their share, and they turned around and they sold their stock for $45. So that extra $15 above par value, how do you record that on the actual statement? So, well, what you're going to do is put that extra $15 per share, $15 multiplied by how many ever shares they issued, under the capital surplus section right here. And that would be true for preferred stock, which would have a par value, as well as redeemable preferred stock, etc., etc. There's multiple different things that can create capital surplus. Another one would be, for example, let's say that some municipality wanted to have a Walmart store in their particular area, so they may offer to donate land to Walmart in exchange for them building a store there. And that's quite common, so you may have a situation like that. Well, how do you account for that capital surplus? Well, that comes into capital surplus. It falls under this item, which would not be counting common stock, preferred stock. So if it's not one of these other types of equity, then it would be a capital surplus. Now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.